Good morning.
Good
It's a
morning.
beautiful Monday morning. The Lord has given us the grace to be here. We thank the Lord. It is from County 046 as usual. I would like to introduce Power Monday. As the name suggests, we are the powerhouse. We meet every single Monday as from 7:15 to 8:15 when it is not a public holiday in Kenya. We meet virtually, however, every quarter we meet physically, and the last quarter of the year is culminated with a dinner, of which the end of October, the last week of October, we are going to meet for a dinner, and details will be shared later. We discuss diverse topics regarding personal development, as today we are going to discuss loans and credit limits. And on that note, allow me to go direct to Swahili. Leo nina shairi lenye mada nafasi. Nafasi. Nafasi ni upepo, huja polepole, huondoka ghafla. Na macho yakilala, hukosa kuona. Na moyo ukichelewa, husalia nyuma. Nafasi ni mlango, ukigonga fungua kwa ujasiri, ni mbegu ya kesho. Ukipanda leo, huwa utavuna. Waliotubudhu iona wazi, waliokata tamaa hufunikwa na kivuli, kwa kila jua kuchomoza, nafasi mpya huzaliwa. Usiogope, usisite. Maisha ni msururu wa milango, kila nafasi ni daraja linalokupeleka mbali, mbali zaidi vile unavyoota. Nafasi ni mwanga, huwaka gizani pa hofu, ni mwongozo wa safari kwa yule asiyekata tamaa. Nafasi ni rafiki, hajifichi kwa mwenye bidii. Mtu mwenye shaka akipuuza, huenda asiyejitahidi. Huwa aliye makini, nafasi huipata. Nafasi ni bahari, mapana yasiyo na mipaka. Ukiingia kwa mashua ya imani, upepo wa matumaini hukuvusha. Nafasi. Nafasi ni zawadi. Kumbuka huwa haipewi mara mbili kwa urahisi. Ikawepo kesho hauisikae, leo ndio yako, kuwa na hakika, chukua nafasi yako. Asante.
Thank you so much, Dr. Lucita. That was such a nice poem. Thank you so much. And we really appreciate from Power Monday that every Monday you grace this platform with a poem. We do not take it for granted. Thank you so much, Dr. Lucita. I call upon Odhiambo Olale to come and introduce the guest speaker of the day.
Asante sana, nashukuru sana umenikaribisha. Nami pia nitajaribu kuongea Kiswahili sanifu ama mufti kama mwenzetu.
You know, we have other people who don't understand Swahili. So,
oh, okay. So I'm just also
I'm just helping you. I know you also can't speak a lot of Swahili anyway.
just about cheering people up. Anyway, good morning, everybody. Welcome again to the Power Monday meeting this morning. Our guest speaker today is none other than Andrew Awilly Owilla. Andrew Awilly Owilla is a seasoned senior banking executive with over 15 years of progressive leadership experience in commercial, SME, and institutional banking. Through a distinguished career, he has led high-impact teams, driven inclusive growth strategies, and successfully delivered sustained portfolio expansion in complex and dynamic markets. Currently, he is serving as Vice President and Senior Relationship Manager at Absa Bank, Kenya. Andrew leads strategic banking relationships across financial institutions, energy, oil, gas, and telecommunication. In this role, he has consistently delivered double-digit growth, championed transformative business models, and steered award-winning client engagement strategies across SMEs clusters and corporate portfolios. Andrew's career highlights include spearheading successful business turnarounds, expanding financial services into underserved SME markets, and advancing financial inclusion through innovative ecosystems, financing, and value chain engagement. Finally, he is passionate about unlocking capital flows to power enterprise development. Andrew combines strategic thinking, operational excellence, and collaborative leadership to drive both financial performance and inclusive economic impact. That good introduction, we welcome our brother to come and share his thoughts with us. Thank you.
Welcome, Andrew. The floor is yours, unless you, yes.
I dropped off for a minute, but if you allow me 1 second, I just transfer to a different machine.
Okay.
Yeah.
Okay.
And thank you for the warm introduction. I think I was getting to enjoy the introduction from Mr. Olale. Now, I think I have a challenge with my machine. I will just use the phone to take you through this presentation today. Like it has been mentioned, my name is Andrew Awilly. I'm a banker for over 20 years. I've worked in the banking industry for all this time, right after campus. I've worked in a number of banks. I've done Stanbic. I've also done Citibank. I'm now currently at Absa Bank within the corporate and investment space. I just want to, first of all, ask and maybe pose a question to the team here. When you're talking about access to finance, when you're talking about loans, and you're approaching a bank, what comes into mind? What comes into mind when we talk about SMEs, when we talk about access to finance? What is the general perception out there about facilities or loans from the bank? I just want to get
Somebody has said barriers. That is Annie. Somebody, no, okay. Very high interests.
very high interest, yes.
Architect Mtua. Collateral, that is Odhiambola, no, that is Ayusa. Then Odhiambola, let's say stress. Too many requirements from Dreamcrest. High interest, that is from Dr. Store. Lot of demands. All that. Loan limit from Rivi. Harassing from Shiro. Yes, those are the ideas.
So, I mean, when you talk about the process of accessing a facility from the bank, many a times, particularly the SMEs, go through a lot of challenges. And it is assumed that it is a painful experience. It is assumed that the default answer is a no. But that is not the case. Today, if you look at all the banks in Kenya, a good number of banks have allocated funds specifically for SMEs. And banks are geared towards facilitating that flow of capital. The main reason why banks exist today is to provide those financial services. But now the question I just want to pose to you as a business person is, how ready are you? How prepared are you for that funding? There are certain things that banks will look out for. Many a times you find SMEs running their businesses and driven by passion. When you hear an SME talking about their businesses, the passion in whatever they're doing, I mean, that is the driving force. But the question we want to ask ourselves, can someone else walk through the journey of your business with the same passion? This is a third party, someone looking at your business, despite the story, the beautiful story that you have. What documents do you have in place? There are three very important items I want to talk about today. First is registration. And the second bit is proper documentation. And finally, your business. As a business person, you need to understand two important aspects when you are accessing finance from the bank. Now, the bank will use your historical data to assess your business and to see how then are we going to support your business based on those historical data. That is the reason why you'll be asked, give us your 12 months bank statement, give us your audited financials, and so on and so forth. So your historical data is very important. Many a times SMEs don't keep proper records. SMEs don't document properly. It's important to know that banks will always be looking for those records. And the reason why the records are important is because your historical performance gives us an indication of what your business is likely to be, the growth, and so on and so forth. Now, what does bank statement tell us? And why is it important to have bank statements? And why is it important that every single cent that we sell, why should it go through the bank? That record is very important. Bank statement tells us so many things. First of all, it will give us a trend of how your business operates. It will also give us behavior. It will give us an indication of your behavior. It will also give us more information about your business. Who are you paying? Who pays you? And how does that money turn over into your account? It is important for you to keep proper bank statements. And for instance, if today I get a 6-month bank statement and I can see maybe 2, 3, 4 checks that have been unpaid, what we call bounce check, it quickly tells me something about your business. When I see a check that probably has been unpaid, it gives me an indication of some distress. It tells me something about your character, and it also gives me an indication of, what kind of people do you do business with. These days, it is important that you take note of what we call integrity, because the bank statement gives us an indication of who you are, what kind of a person you are, in as far as your business is concerned. There are 5 things that banks will look out for. They're called the 5 C's. And the first C is character. You as a person, what kind of character are you? Your business, your bank statement gives us an indication of your character. Does your word or the check that you issue mean something? Character is very important. If you've heard of the saying, borrowing Peter to pay Paul, sometimes you find yourself in a situation where you have committed, you've given your word, but then whatever you're expecting does not materialize. But you have a name to protect. That is the time sometimes you hear somebody borrowing from one person to pay so that he makes good his name. So character is very important. The second C is capacity. Capacity. Sometimes you go to the bank, you're asking for 5 million, And then after analyzing your report, your data, then the bank says, no, for now we will start with 3 million. It is also important to understand that you do not want to commit your business to an extent where you're not able to run it. There is what we call the cash flow. There's also what we call gearing. So you don't want to overcommit yourself. It is important to grow gradually. And banks, I normally tell people bankers are doctors. The only difference is they treat financial challenges. So when we look at those statements, when we look at your business, we know what is appropriate, the right dosage. You need to grow gradually so that you don't overcommit yourself. Then the third C is capital. How much does your business, how much does you as a person, what have you contributed into the business, what we call the owner's equity? It's also very important. Remember, you're the one running that business. So a financial institution is not coming to take over the business. It is coming to boost you, to propel you to the next level. The fourth C is collateral. So collateral is important because, the bank also wants to secure itself, knowing very well that once I extend this capital, I'm able to collect. I'm able to have a fallback. Banks don't lend to collateral. And collateral, in this case, security, is not the ultimate. You can't walk into a bank and tell them, hey, I have a property here, I need to access money. And no. The most important thing that we look at is your business and cash flow, and the ability for that business to be able to repay the facility. The fifth C is condition. Every loan will come with condition. There are certain conditions that will be put. You're supposed to maintain a certain level of cash flow. You're supposed to have a healthy book. So there are several conditions that will come with your facility. But more important, when you look at all this, is your ability to repay the facility. One more important thing that you will hear and in the banking sector is that cash is king. Cash is king. Every time your business is in distress, when you lack liquidity. So at any given point, you need to have cash that helps you run the business. You'll be trapped if you're not able to pay your services, your suppliers. You'll be trapped if you're not able to meet your obligation, the basic obligations for your business. It is very important. There are certain level of liquidity that you must maintain, which is also very important in the overall health of your business. Another important issue that I just want to share with you today is the fact that as a business person, you need to belong into an ecosystem. Where do you fit? Where do you fit? No business today operates as an island. You need to fit within an ecosystem, either fellow business people or other networking forums. It helps to give credibility when you're accessing finances. Now, important to note is that when you approach a bank for a facility, you need to have the right facility. You need to have the right product, because money is money. Money is money. Today, if you go to a bank, there are certain facilities that are available. So instead of just going for a loan, a direct loan, you may want to ask whether it is a specific loan tailored to your business. There are things like LPO financing. There are things like invoice discounting. There are things like letters of credit, or even a short-term loan that banks do offer. So get the right product for your right business. For instance, if today you've delivered services and you've invoiced, and the payment term says 90 days. So while you are waiting for those 90 days, you can go to the bank and say, hey, I've already invoiced Safaricom, for instance. I've invoiced EABL, for instance, or I'm expecting payments to come from a particular institution. and therefore I need to access this particular future cash flow. It's a specific product. It's an invoice discount. You don't have to go and ask for a loan. You need to go and get what we call an invoice discounting. Therefore, tailoring and making sure that you get the right product for your facility is important. I don't know whether there are any questions going on the chat. If there is, you can let me know.
Yeah, you will have some minutes. You can finish your presentation, then you will be having questions.
Fantastic. Now, another important thing is when you want to acquire an asset as a business, most SMEs rush into acquisition of assets, real estate, land, and so on and so forth. Remember, the cash flow from your business is supposed to be sustaining that business. And if you have to acquire any asset, be it your own personal asset or a business asset, please go for an asset finance. Do not use the cash flow for the business to acquire an asset, what we call CapEx. The cash flow for the business is supposed to help sustain the business. And when you go to a bank to access an asset, take note. The difference, there's a difference between the business asset and your own personal asset. There's also a difference between the cash flow for the business and profit. And many a times, SMBs do not want to differentiate the two. So actually, you're supposed to be paying yourself like any other person, like any other employee that you have in your business. Cash flow is very important. Like I mentioned, cash is king, and cash is what keeps the business running. Allow me to bring to your attention what happens behind the scene when when you go to apply for a facility. Somebody talked about high interest rate. Somebody also talked about how frustrating the process is. Two things that come out today in the banking sector. One is your relationship with the bank. Do you have a dedicated relationship manager? And what kind of relationship have you built with your bank? There's what we call the basic KYC, know your customer. Know your customer is not just about the documentation that you present. It is the relationship that you have with your bank. That relationship is very, very important. These days, it is not like before. You must have that relationship with your bank. And building that relationship also helps in creating your track record, your trust, and so on and so forth. So when you walk into a bank, and today the model in the banking sector, if you're an SME, if you're an enterprise, you have a dedicated relationship manager. Or even if it is the branch manager, do you have that relationship with your bank? The second bit is that remember the cash that banks have, they're custodians of this is money entrusted to them by the depositors. So there's a cost to that money. So the interest rate that is charged on the facilities that are extended factors in what we call the cost of funds. Remember, there are two things that banks normally look at. How cheap did we access the funds? And what is the return that we expect out of this money? And that is why banks will carefully deploy funds, knowing very well that if I deploy unsecured and I deploy a secured facility, the interest rate to these two facilities are totally different. Obviously, an unsecured facility would be more expensive, given that the risk associated with that facility is slightly higher. A secured facility is slightly cheaper because we have comfort that in the event the business is not able to repay the facility, there's a fallback. So, and important to note is that banks do not lend to security. Banks lend to cash flow. It is the cash flow that actually sustains the business. Important to note again is the fact that you do not want to take an extended loan over a long period of time. The shorter it is, the better. The shorter it is, the cheaper again. And please note that all these facilities, be it a term debt, be it a working capital, be it an overdraft, the shorter it is, the better. A longer period of time, it gives you an extended interest and you'll be paying more. Now, important to note as well is when you are planning your business and you're scheduling your cash flow, it is important to take note of the obligations, the most important obligations for your business. If you have an expensive loan and your business is growing, that should be the priority. Start by paying off the expensive loans and retain the ones that are cheap. Today, banks are offering both secured and unsecured facilities, but only if you have a track record, you have a relationship, and your business is able to demonstrate that it has sustained cash flows. I think I want to stop there and just pause. If there is any question, I'll be happy to take.
Okay, I think that's right. Somebody started by asking, maybe you should start by explaining what SME means. Yeah, somebody's, that is Anne, said, maybe Andrew should define what an SME is to a bank. Some are nano, micro, but we presume our businesses are SMEs, or something like that. What does SME mean in the eyes of the bank?
So different banks have categorized SMEs differently. The small and medium enterprises. So within the SME space, we have what we call the micro, and then we have what we call the medium enterprises. So usually it is banks to bank will define and categorize them differently based on turnover. Actually, what then banks use to segment SMEs is the turnovers. So if your turnover is up to, say, anything up to 50 million annually, you'll be considered a medium enterprise. If your turnover is less than probably 10 million, you also be considered a micro. So it varies from bank to bank. And of course, it is a factor of how banks decide to segment these relationships.
You said at the beginning that you are going to talk about registration, proper documentation, and then your business. So did you talk about registration, or what was it about registration, and how is it important? Is it registration of business or what?
So registration is very important. There is what we call registration and compliance. As an SME, you need to have the proper documentation that defines or identifies your business. If it is registered as a sole proprietor or a limited entity or whatever form of registration you adopt, it is important to have the right documentation. Remember, that is the basic of KYC, knowing your customer, because it is those documents that will come and tell you, this is the legal entity, this is how it is registered, and compliance, because most important to banks is to know and identify a customer. When you talk about proper documentation and record, like I mentioned earlier on, your story must be documented. There must be documents to support the journey of your business. And then the third thing I talked about was the business. The business itself, remember, that is a living entity. That is a corporate entity. You need to differentiate yourself from the business. And I think it is important that you have proper records, you have proper compliance, and proper KYC documents.
Okay. So does it mean that people who, the businesses that are registered are more likely to be qualified for loan than those ones that are, the person is the business?
So when you're registered and you're formally registered, you stand a better chance. You stand a better chance. We've seen SMEs sometimes having M-Pesa statements that are heavier than the bank statements. And you see, that M-Pesa statement is your M-Pesa statement. if that transaction would pass through an account of a legal entity or a registered business, you stand a better chance of accessing facilities as opposed to you as an individual.
Okay, thank you. Then somebody said you've mentioned on invoice discounting. Could you say more about what that means? And then somebody said beyond invoice counting, what other tailor-made products are there?
So invoice discounting, like I mentioned earlier on, is you've performed, you've delivered a service, or you've offered, or you've you've done some services or sold, and the payment terms probably is 60 days, 90 days from the date after you invoice. So invoice discounting comes into play when you have already invoiced and you're expecting this payment to come in 60 days or 90 days, depending on various payment terms that various organizations have. So when you go to a bank and you tell the bank, hey, I have an invoice here, I'm expecting my payment to come in 90 days, but I want money now. So the bank will take that invoice, do a few confirmation or checks, and then advance to you probably 80% or 70% of the value of that invoice. And then the bank waits for that payment to come and liquidate the position. So that is invoice discount. There are so many products. There's LPO financing. LPO financing is when you have an LPO, you're supposed to fund this LPO. You walk into your bank, you have your credit limits, and you engage the bank for, of course, there are various checks that we normally do to check the validity of the invoice, the track record, the counterparty, it is an LPO from which institution. And then we fund 70, 80% of that LPO upfront. There are also what we call short-term loan facilities that are tailored for, very short, 90 days, 60 days, maximum 180 days, just for purposes of supporting you to accomplish LPOs or services that you're supposed to be doing. There are also letters of credit, there are guarantees, various facilities that speak to the needs of your business.
And all of them still go through the rigorous process of the 5 C's documentation. Is there one which is easier to get?
That process, you can't avoid it. You can't avoid that process. The 5
Okay.
C's are very critical to the bank. So,
Okay.
like I mentioned earlier on, the relationship that you have with your bank, because you don't have to go through all that process all the time. Once you've established a relationship and you have a limit with your bank, you'll be able to tap into those services.
Good. And based on that, is the relationship personal or is it B2B? For example, must I know my bank manager or relationship manager in person, or just my business or something?
So the relationship you have is with your business. It is with your business. You don't have to have a personal relationship or know somebody at a personal level. It is the business that has created that relationship. Today, if my branch manager understands my business, he knows the journey of my business, he's seen the business grow. If I issue a check and I tell my branch manager, please, I do not have enough funds, I want you to clear for me this check. Tomorrow or by Friday, I'll be able to regularize the account. If you are new and you do not have the business, the bank does not have a relationship with that business of yours, it will totally be different with someone who has already created what we call a track record. You have a relationship with your bank. I mean, you've seen banking evolving to an extent where relationship managers these days are called trusted advisors. They understand your business, they understand the schedule of your business. They know sometimes even when you're supposed to be making certain payments. It is to that level that I'm talking about. It is the business. How well do you understand, or how well does your bank understand your business?
but bank managers and relationship managers get transferred, they get out of business, whatever. Do they hand over that particular relationship, or a new one starts afresh?
No, there's usually a handover process. But again, remember, this should be your own initiative. It's a two-way. It's a two-way relationship. You as a person, you've got to initiate it, and of course, banks are the relationship management model allows people to get to the point where you're called a trusted advisor for a particular reason. You know that business to an extent. Should you get a call, should you get a check that is hitting the account, you have that direct connection with your bank.
Okay, thank you. Then Patrick asked, um, how is how different is the new pricing model from the previous model for risk pricing of loans? I think this one came in when you said that today it's not like a long time ago, whereas nowadays you need to build relationship and things like that. So is there a difference?
So the pricing model that CBK introduced recently uh, aims to make uh, the pricing or interest rate regime more open, more transparent. So we will be making reference to one reference point, and of course each bank, adding a margin or on the price. But more important to note is that all the factors that are considered into getting into the price of a facility, they remain the same. The risk profile, the risk grading, your credit score, your rating, and so on and so forth. The only difference here is that every bank will have a common reference point, similar to what more developed nations have.
Okay. Murithi was asking, are institutions registered with Credit Reference Bureau, CRB? I don't know how that comes in. Do they have?
Yes. CRB, you can do CRB checks even for institutions and for individuals. And of course, all these institutions, the data is available. Remember, credit referencing gives you a rating, whether you are a borrower or not. So all this data is available. Again, banks they must always do a check on CRB, both individual and institutions. And the rating is important in arriving at a cost, the pricing of your facilities. So the more riskier you are, the more expensive you are, definitely, your facility will be. The better your rating, the easier for you, and you're able to access facilities easily. Remember,
Yeah.
everybody is on CRB. There is what we call positive listing and negative listing. So whether you are borrowing or not, that record is somewhere.
Everyone is in CRB. Okay. Also, please elaborate on the meaning of a startup in the same concept of MSME. Do you also have clustering of startup or
So any
definition?
business that has been in existence for less than 3 years is considered a startup. So, and then this also varies from banks to bank. Um, there are banks that will look at 2 years, others will look at 3 years and categorize them as startup. The reason why that categorization happens is just to get, at the very initial phases of the business, there's a lot to learn. There's a lot to learn. It also affects when you're applying for a facility. A business that has been in existence for 10 years compared to a business that has been in existence for only 3 years, their risk profile are totally different. The person who has done 10 years has gone through a lot of experiences, the challenges that come with starting up a business. You've gone through the entire learning curve. You understand the terrain of your business, the competition, and so on and so forth. So again, pricing will differ for a solid, mature business compared to a business that is considered a startup. But again, startups, most SMEs, in their less than 5 years, There's a lot of aggressiveness. There's a lot of passion around it. I've seen a couple of businesses and banks having, tailored products for startup to support startup within various sectors. Could be agriculture, it could be the ICT, and so on and so forth. I've seen a lot of banks also coming up with products for women in business, specific product for women in business. Banks have also come up with programs to support, train, equip, and just equip entrepreneurs with the necessary skills to manage their businesses.
On that note, do banks finance a business to get started? I have an idea. I believe it's a bankable idea. I have no accounts. I have no documentation except that the business is registered probably. No records, no bank statement.
Rarely will you get support in that manner. When you do not have documentation, I mean, that idea is good, but you need to actualize it. You need to have that idea in action, in motion. Banks will come in to support when you've already started working, but we're not the ones coming to help you crawl. Our work is to propel you to take off and get into 40,000 above sea level. But you've got to go through the runway, my friend.
Okay.
Yeah.
So somebody has asked a user, could you describe on the concept of de-risking of SMEs and how the credit guarantee schemes work for banks?
So credit guarantees and de-risking, these are options that banks go out for, particularly to support SMEs. There's what we call the African Guarantee Fund. There are various institutions that come in to support and support SMEs. So banks partner with this institution, either from a portfolio level or from a transaction level, and they take certain level of risks. If, for instance, today I'm supposed to fund my SMEs on an unsecured basis, so this institution will come and say, in case of any default, we shall compensate you to up to 50% or 25%. Or they take a certain percentage of the risk and secure it. So a lot of support coming through for trade-related transaction, agribusiness, and women in business as well. A lot of support coming in to support people with disabilities and so on and so forth. So, yeah, banks get support to further on lend, particularly the risky business on unsecured basis.
Thank you. There is a question here which I believe you had handled above there, the role of CRB, which is good. And as we move on, just to mention that Live Your Dream can always help you to get yourself ready for the credit. And this platform, Power Monday, is also sponsored by ICT Gurus, putting your business online so you get more revenue. Somebody says, Miriam, that is, most businesses in Kenya are unstructured due to tedious, expensive, and frustrating process. So we are left at the mercy of digital lenders who exploit us with their terms. And I don't know whether you want to comment in that and about that. Then somebody asks, that is Japheth, is there interest charged for invoicing products? I think like invoice discounting.
So interest applies to all the facilities that you would access from a bank. There's a cost to it, so there'll be an interest component on it, whether it is invoice discounting, LPO financing, or just a normal loan. The question on digital lenders or being left to the mercy of these people who exploit. I mean, if you look at the interest rates that these digital lenders levy, it is way expensive. It is way expensive. But again, you will appreciate the fact that this is also mainly the facility is unsecured. Two, you do not have a relationship with the digital lender. So they will exploit you. They will exploit you. They're quite expensive. Some of them are not regulated. The fine prints on digital lending, you might not even understand some of them. The interest could be compounded. You miss a repayment. The penalties or the charges are exorbitant. As much as you can, please stick to the financial institution, the banks, the normal banks. You will never be charged interest rate to the tune of 24%, per month, or 30% per month. No. So the digital lenders is quick money. It comes really quick sometimes. It saves situations, but if you look at it overally, it is too expensive. You don't want to go into a situation where you're borrowing at very exorbitant rates. For SMEs, remember, your margin probably in the business that you do, if you look at what margins you're making compared to the interest rate you'll be paying these digital lenders, you'll be out of business. You'll be working for them, literally.
Yeah, true. Yes, Miriam here said the banks also need to tailor requirements to the present entrepreneur. For example, I have 3 plots, but no cash flow or capital to start and run the business. So you're saying they've got to get started and then you find them running on the way.
So let me just make a comment that we banks exist to support. We help you get into the space, but we need you to go through the runway. So you'll have to do some of the heavy lifting. You have to do some of it's a partnership, and no bank will come to lend and take over your business. Mostly you'll find 30%, 30, 70, 80, 20 kind of partnership. If you're buying an asset, the bank will do 70% or 80%. We also need to see your contribution into the business. Remember, you are the owner of the business, so we need to see your input first. So, what we call the debt to equity. You as a person, what are you contributing into this business, so that we also come in with our capital and support you to get into the space. Thank you.
Thank you very much. I think we are almost running out of time. So the idea remains until distracted. People are also appreciating you, the mind, and takes off. Collaboration between NGOs. When a deal is too good, think twice. What's your advice to us in view of changing climate for many loan offers by big and small? Yeah, I think the idea is that today there are lots of loans that are being proposed, all sorts of, whether digital or hustle fund. But I think you've touched on that. What one does one have to ask for these funds? For example, if I know AGF is securing funds, do I go and ask for the loan secured by AGF or what? And then lastly, so that we close that, you'll just comment briefly, what are the advantages of a bank loan versus a SACCO loan?
So SACCO and bank, what is the difference? Remember, if you're a member of a SACCO, it means you contribute or you save. So you are a member of that SACCO. There's a contribution that you make, and then you can borrow later on. So there's no big difference. Only that we have different options. People prefer either SACCO. Sometimes the notion is that they're cheaper, they're flexible, they're it's more of a membership thing, and then it's people coming together. Then you'll have probably when you're borrowing, you have shares. It makes your borrowing slightly cheaper. You'll have people guaranteeing that facility. So the model that SACCOs work with is slightly different from what banks do. When you are accessing a facility that is guaranteed by some of these institutions, it's a partnership between the institution and the bank. So When you're accessing that fund, it means at the back end of it, those arrangements are in place to support you as an SME to access the fund. So you must not really go and ask for the fund and say, hey, I want the facility that is secured by AGF, for instance. Those are arrangements behind the scene, and different banks have different arrangements with the institution to support SMEs.
Thank you very much. I think I'll turn it over to Noel. You can move on to the next stage.
Thank you so much. That was such a good presentation. And just to let you know that ICT Gurus, Live Your Dream, can help you register that business so that when you go get your loan, it is going to be business versus vis-a-vis business, not you as an individual vis-a-vis the bank business. So get in touch with OPP, he'll sort you on that. But that was such an awesome and wonderful presentation. Asante sana. So I call upon Mr. Maurice Omondi, who is going to give the vote of thanks. Immediately after Mr. Maurice Omondi, we are going to have Antonia, who is going to give us information from the administration.
Okay,
Yes.
okay. So thank you very, very much. I would like to take this opportunity to really thank our speaker, the excellent talk you've given us today, especially around understanding what happens behind the scenes when it comes to loans. So I go back by also thanking Dr. Lucita for the point that you gave us, nafasi. And one which the sentence which I underlined is nafasi ni mwongozo wa safari asiyekata tamaa, and many others. So in fact, I was asking myself, what is the difference between nafasi na chanzo? Does it mean the same thing? And but I think it was such a powerful poem, especially when you talk of opportunity and chances in life when you interpret it or translate it to English. I also like to thank you so much, Bwana Andrew Awilly Owilla, for really helping us to understand these things. And somebody recently said that money is available. It's only that ideas is what is lacking. So what you have shared with us is just a proof that there's money available to support businesses and ideas. All that somebody has to be is to be prepared. And I also highlight the 5 C's you talked about, the issue of character, the issue of capacity, capital, collateral, condition, as well as cash. And this one resonates so much to what we've been discussing at Power Monday, that character is everything. So if your character, sometimes people only think of character from a point of view of looking for a job. But today you've highlighted that it's also very, very important, even when it comes to looking for a loan. They look at your character, they get your reputation. And thank you so much. And even capacity. And also something else which you said is the capital or the collateral you're putting into the business. You cannot expect a loanee to give you everything. You have to put something on your side, as well as the other collateral which you are putting in place, as well as the condition. I also like to thank you so much, Lady Noel, for the prayers and for being there to support the process. Otieno Paul Peter, Olale, and all the board members at behind the Power Monday, the ICT gurus, and all the participants who made it today. Because if we don't have participants, then the whole thing is just a joke. But when we have many participants coming in and remaining and asking questions, we really, really appreciate. So thank you very much, everyone, and wishing you all a good day. I hope this discussion continues in our WhatsApp group, in the video which is shared, and in other spaces. So we can always connect bilaterally after this. So thank you so much. This is Maurice Omondi. You can also link up on LinkedIn and we continue conversation. So over to you again, Lady Noel. Thank you.
Maurice nowadays puts on specs. Maurice.
Wachana na Maurice. No, Maurice.
Good morning. Good morning, Monday team.
Good morning.
Today I'm joining the meeting while standing. I got some example from one of our speakers we had here, who gave us a talk while standing. But for me, it's for a different reason. And I do want to do it in the course of this meeting. Thank you so much all for creating time to join the session. It has been such a great session, and we thank our speaker for creating time to come and speak to us. We are gearing up for our dinner, which is in like 3 weeks' time, from 3 or 4 weeks' time. And the registration is ongoing. If you've not yet submitted your name, kindly do so, so that the preparation can you can be considered as the preparations go on. And after the Power Monday is ended, in case you have any question concerning the dinner, I would like you to pass it across or write on the chat session. After this, we have a board meeting, and would like to consider all your concerns, and it would be good to have them before we start the meeting. So if you have any concern concerning the what it entails, what it's all about, how it's normally done, who are the speakers, the program, kindly put it across, and we'll be able to handle it during our meeting, so that we make sure that everyone's opinion and also the requirement is catered for, as much as it aligns with Power Monday goals and vision. Let me also take this opportunity to thank I don't know whether OPP has done this, but we just had a very powerful graduation on Friday as Live Your Dream and ICT Gurus. We graduated quite a number of TOTs, and most of them are here. And I would like us just to give a shout to them. You can send an emoji for them just to feel the love, because most of them are from here and they are joining this meeting today. So congratulations to all the graduates. We are so grateful that you managed to go through this TOT, and now you are qualified trainers. Go out and do all that it takes for your training of trainers certification. And with that, I would like to take the meeting back to our moderator. If you have something to say.
Just to mention that the next cohort number 3, for certifying, I heard Andrew talking about women in business. We have a product called Women in Digital Business, which is through partnership with ILO, that is International Labour Organization, ITCILO, International Training Center for ILO. And it's been running for the past 10 weeks, and it ended last Friday. We are starting another one the first Friday of October, the 3rd of October. So the link has been shared in the chat. You are welcome. If you want to be a certified trainer to train entrepreneurs on how they can make use of social media, online presence, and generally digital platforms to be able to grow their businesses and develop sustainable profit, then let them sign up. Thank you very much. I think information has been placed there. And congrats to all the people who graduated. About 33 people signed up, 22 people managed to finish and graduate. We believe the other people will also continue. There is no repeating, there is only continuing. So they will continue and finally finish. They don't give up. Thank you very much. I think that is it. We can move to the end. And then, Andrew, if you are there, some other people still have some other questions you can handle briefly. Then we